Hello, welcome to Measures of Earnings. In this segment, we're going to talk about 4 types of measurements for earnings for a company. So basically, we're going to look at the income statement for company, and we're going to look at some specific items that we need to look to see how profitable and how well the company is actually doing. Those items are net income, EPS, earnings per share. The third item is EBIT, which is earnings before interest and taxes. And the fourth one is EBITDA, earnings before interest, taxes, depreciation, and amortization. Now for the first one, net income. Specifically, what is it? Net income is simply total revenue minus the expenses. So when you look at the income statement, this is the basic information you're going to be looking for. So what specifically, though, you may be asking, does net income mean? What is it from a company standpoint? Basically, net income reflects the differences in a firm's capital structure, the taxes, and any operating income. And why is this important, and who's looking at this? Well, it's the shareholders and the stockholders, because they want to know how much net income there is, because that's where the dividends and any retained earnings are linked to the net income. Now here is a sample. Actually, it's from the 2021 annual report for Tractor Supply Company. And if you'll notice here, we have the top line is net sales, and we subtract out the various line items there, and right where the red arrow is the net income. So we take our total sales and revenue, and in this case they refer to it as net sales, minus any expenses, and those are all the expenses listed there. So we're going to get that net income line item. Now the second measurement of earnings is called earnings per share. And you may ask, well, what is that? It is simply the earnings, which is our net income, divided by the number of shares outstanding. So obviously companies can buy back or release and issue shares, common stock, to shareholders. So how do you look at what is the actual earning per share that's out there? So this is a way to streamline the measurement between companies as well as industries. So we're going to look at net income divided by shares outstanding. And this basically means, let's look at how much income, how much money the company has on a per share basis. Right, so we are actually going to look again at this Tractor Supply Company here, and they don't label it as earnings per share, but here they label it as net income per share basic and then diluted. So that's just the basic and the diluted. Don't worry about that at this point, but this is what it means. So we would have our weighted average shares outstanding. We have the basic and the diluted. It's 2 types of shares, so don't worry about that at this moment. But we can look at the basic number, that's how many shares are outstanding, and we're going to divide it by our net income, and then that's going to get us to our net income per share for basic, and that's the $8 range. Now moving on to the third measurements of earnings, it's EBIT. And what is EBIT? It's basically your total revenues minus your operating expenses. And this is, EBIT is also known as the operating income. So for our example here, is basically on the line item, it says operating income. So we have our net sales, and we have some of our expenses that have been taken out, and this leaves the operating income. You could also name that EBIT. Now the fourth one is EBITDA, which is earnings before interest, taxes, depreciation, and amortization. So basically, what is EBITDA? How do we get to it? We just take the EBIT, also known as operating income, and we add back any depreciation and amortization. So why is EBITDA used? It is used because it's a better measure of before tax operating cash flows. So how is the company actually doing with their sales minus the cost of their goods and a couple of other items such as the depreciation and amortization. This doesn't take in any tax benefits that they get. So we do want to remove that, the tax benefits, and just look at more of how the operating cash flow is for the company. So in this example, it actually doesn't give us an EBITDA line, but we would have to go back and calculate that. So remember, EBITDA is EBIT plus depreciation and amortization. And we remembered EBIT is actually another name for operating income. So we would take that 1,306,698, and then we're going to go back and add in any depreciation and amortization, and that's the 270,158. So by doing so, that's going to get our total EBITDA as 1,576,858. Now, once again, that takes us basically as a brief overview of the four measurements of earnings for a company. And once again, that was net income, earnings per share, EBIT, and EBITDA. If you have any questions, feel free to reach out to me. I hope you have a great day. Thank you.